Apple Inc. remains one of the most influential and valuable companies in the world, with a strong presence in consumer electronics, software, and services. Investors often look at Apple as a cornerstone of their portfolios due to its consistent financial performance, innovation, and brand loyalty. However, like any investment, Apple comes with both opportunities and risks. A thorough analysis of its fundamentals, technical indicators, cash flow, support and resistance levels, and market position can help determine whether it deserves a buy rating. Apple's ability to innovate and expand into new markets continues to drive its growth. The company has successfully integrated artificial intelligence into its ecosystem, enhancing products like Siri, Apple Vision Pro, and its suite of productivity tools. AI-driven advancements in health monitoring, augmented reality, and automation are expected to further strengthen Apple's competitive edge. Financially, Apple maintains high margins and consistent revenue growth. With a market capitalization exceeding $2.9 trillion, it remains one of the most valuable companies globally. Its services segment, including iCloud, Apple Music, and the App Store, contributes significantly to recurring revenue, reducing reliance on hardware sales. The services division has seen steady growth, with increasing subscriptions and engagement across its platforms. Apple's expansion into emerging markets presents another growth opportunity. In regions like India, where demand for premium smartphones is rising, Apple has been increasing its retail presence and manufacturing capabilities. The company's ability to penetrate these markets could lead to substantial revenue growth in the coming years. A major contributor to Apple's ability to seize new opportunities is its strong cash position. The company generates $118.25 billion in operating cash flow, reflecting a steady year-over-year increase. Its free cash flow stands at $98.48 billion, reinforcing its ability to fund expansion, research, and strategic acquisitions. Stock buybacks and dividends further support investor confidence, with Apple repurchasing over $100 billion worth of shares annually. This approach enhances earnings per share and boosts long-term shareholder value. Despite its strengths, Apple faces several risks that investors should consider. One of the primary concerns is its high valuation. Apple trades at a 27.2x earnings multiple, making it expensive compared to some of its peers. While its strong financials justify a premium valuation, investors must assess whether the stock is priced too high for future returns. Regulatory challenges pose another risk. Apple has faced antitrust scrutiny, particularly regarding its App Store policies and fees. Potential restrictions on how Apple operates its marketplace could impact revenue and profitability. Additionally, ongoing legal battles and government regulations could introduce uncertainty into its business model. Supply chain dependence is another critical factor. Apple relies heavily on China for manufacturing, making it vulnerable to geopolitical tensions and disruptions. Any restrictions on trade or production could affect Apple's ability to meet demand and maintain profitability. Slowing iPhone growth in developed markets is also a concern. While iPhones remain popular, market saturation in regions like North America and Europe could limit future expansion. Apple must continue to innovate and diversify its product offerings to sustain growth. From a cash management perspective, Apple also faces challenges with capital expenditures, which totaled $11.07 billion. These investments are necessary for product innovation, supply chain improvements, and retail expansion. The company efficiently manages debt, having repaid $10.8 billion in long-term obligations, but any unexpected economic downturns could create pressure on its financial strategies. From a technical perspective, Apple's stock is trading near its all-time highs, supported by strong moving averages and bullish momentum indicators. Investors often look for pullbacks to enter positions, and key resistance and support levels play a role in price movements. Apple's stock has shown resilience in market downturns, often outperforming broader indices. The company's ability to generate consistent cash flow and maintain strong fundamentals makes it a preferred choice for long-term investors. However, short-term traders should monitor volatility and technical signals to optimize entry and exit points. Recent technical analysis suggests that Apple has two key support zones, $191.65 to $193.16. This range is formed by multiple trend lines across different timeframes, providing a strong base for price stability. $189.37, a horizontal support level observed in weekly charts, indicating a potential bounce if the stock declines further. On the resistance side, Apple faces two major resistance zones. 206.47 to 213.33. This range is influenced by multiple trend lines and moving averages, acting as a ceiling for upward movement, 227.65 to 229.24. A higher resistance zone that could limit further gains unless strong bullish momentum pushes the stock past this level. Traders and investors should monitor these levels closely as they can indicate potential breakout or reversal points. Apple's financial health remains robust, with strong revenue growth, profitability, and cash reserves. The company has a history of exceeding earnings expectations, demonstrating its ability to execute its business strategy effectively. Apple's balance sheet is solid, with substantial cash reserves that provide flexibility for acquisitions, research and development, and shareholder returns. The company's dividend payments and stock buybacks further enhance investor confidence. With $15.31 billion allocated to dividends annually, Apple remains committed to rewarding shareholders. Considering Apple's solid fundamentals, its ability to innovate, and its strong market position, the company earns a buy rating. While risks exist, the long-term outlook remains positive, supported by its expanding services, technological advancements, and strong financial flexibility. Apple's ability to navigate challenges, maintain profitability, and drive innovation makes it a compelling investment. While short-term fluctuations may occur, its cash position, operational strength, and growth potential reinforce its attractiveness as a long-term investment. Investors looking for stability, growth, and exposure to the technology sector may find Apple to be a valuable addition to their holdings.